A very warm welcome to all of you out there. Greetings of the day. Uh, and as we all know that the agenda for today's discussion will be learning objective B, professional and ethical considerations. Can every one of you please confirm me? Have you gone through the previous lecture relating to learning objective A? I would love to know if there is any query, if there is any question. Okay, so Amina, I would suggest you to have yourself registered on the portal. The registration is complimentary at the moment, so that you can get the access of the recorded lectures as well. Okay. Okay. I'll provide you the number of the representative. Okay. I'll provide you the number of our representative, and our representative will register you for these lectures on the portal, and you will also have the access of the recorded lectures in case if you miss any live lesson, any live session, you will have the access for the recorded lectures as well. Okay, perfect. So we are moving on towards a very important learning objective, which is professional and ethical considerations, one of the most important learning objective of advanced audit and assurance. Okay, so I think my video is clear. If there is any problem, I should change my camera. So your acknowledgement will be very important to me. Is it all good? Perfect. Okay, so what are the main areas covered in this learning objective? That's very important. Code of ethics for professional accountants, fraud and error, ISO 240, and professional liability concerns. Professional liability concerns. Okay. Out of these three, the most important is the code of ethics for professional accountants. We all know. Okay, let me use another highlighter. We all know that code of ethics for professional accountants. This is the most important area in this learning objective. The importance of this area you already know because you have already gone through the code of ethics related portion in your earlier studies of audit and assurance. Here, all those concepts will be recapped as well. And obviously, examiner will going to test this in comparatively complex scenario. Okay, it could be a group audit scenario. It could be a non-audit assignment in which you might be tested about the ethical dilemmas, ethical situations, ethical issues. Are you getting this? So there could be various situations. The scenario could be complex, but if your basics are strong, if your concepts are clear, this requirement shouldn't be a problem for you. This should be a marks gaining requirement for you. Are you getting this? There are easy pickings in ethical and professional considerations question. We'll see how we do that. I'll train you on that. So don't worry about it. Okay. Another area is fraud and error. As I told you, ISO 240. Again, this is not a new area for you. This will more of a recap. Professional liability, this is a new area for you. This professional liability area will be a new area for you. What will we be discussing in this area? we will majorly be discussing about the liability concerns for the auditor. Because if we as audit firm are issuing an audit opinion on which the client is relying, on which the shareholders are relying, and suppose if they make any investment decision, if they make an economic decision, and as a result of our negligent opinion, they suffer the loss, then what should happen? Should the auditor be liable? If yes, to what extent? So all these discussions will be covered in this area of professional liability. Okay, so it's starting from the core of ethics. Starting from the core of ethics, which is the most important area, and we will try to focus on this area in today's lesson. Let's see what are the fundamental principles of core of ethics. Before moving on to this, I would like to spare a few minutes on the discussion of ethics itself. Then we'll come on to the core of ethics. Ethics. What is ethics? What do we mean by ethics at all? Can anyone? Can you share your views? What do you think? What is ethics? Anyone? What are your thoughts on this? Don't be reluctant. You have to write a lot in exams. And I would love to develop this habit in you from today. Okay, Jihan. I hope I'm pronouncing your name correctly. To have ethical behaviors when working. Okay. Anyone else? Okay, if I throw some light on this word, ethics, what does it mean? It means morally correct. Okay. Morally in right direction. Yes. Morally correct, morally in right direction. Okay. Is ethics something which we should be taught? There is another question. Is ethics something which we should be taught? Because we see ethics related content in variety of papers. We see it in audit and assurance. We see it in basic papers as well. We see it in financial reporting paper as well. We see it in SBL as well. We see it in SBR as well. Then we again see it in AAA as well. Ethics all around. Why? Because we being auditors are given a very trustworthy responsibility. Billions of dollars of investments lie on our decision, is dependent on our opinion, not decision, opinion, is dependent on our opinion. If we say that financial statements of this company are true and fair, then many of the shareholders and the stakeholders are going to rely on your opinion because you have this prestigious qualification, which has enabled you to issue the opinion on which millions of people will be trusting. If this is the case, don't you think you have a very, very big responsibility to carry on, isn't it? Okay, it's all about realization, because if millions of people investing billions of dollars on my opinion should be damn trustworthy. I should be upholding the highest principles of morals when I'm doing my duty. Okay. What is the origin? What is the root of ethics? The root of ethics, the origin of ethics. It is not the origin of IFAC. It is not originated by ACCA. Ethics and morale are something which we are taught from our childhood. Okay, our parents teach us about ethics. Our elders teach us about ethics. So where do they get ethical principles from? Have they been HCM members? Question mark. No. Then where? Religion. Beat any religion. Every religion focuses on ethics. The roots of ethics are derived from religions. Are you getting this? Every religion will urge you to be honest, will urge you to be straightforward, will urge you to do it honestly, sincerely, with devotion, with dedication, whatever you are being paid for. Fulfill your responsibility to the greatest values. Uphold the highest principles, highest standards as you do any of your work. Okay, so this is it. Religion, common sense. This is not something which I should teach you from start to end. No, maybe you yourself are very ethical, and looking at every principle, you say, okay, we know this because we practice this principle. We know this because this is how it should be. This is how it should be. We should be honest. We should be straightforward. Integrity should be built in an accountant. Objectivity. We should be free from bias. We should be free from any sort of pressure, any sort of, what you should say, any sort of influence. Professional competence. Yes, we should be competent because we are selling our skills. We should have those skills. We are selling our knowledge. We are selling our skills. We're selling our experience. We being consultants, we being auditors, we are service providers. So we should be best at what we are doing because we are selling it. So there is no question about that, isn't it? Confidentiality goes without saying. If we are indulging in a professional relationship with a client will be sharing lots and lots of sensitive information with us. And that information is very, very confidential. We are not supposed to leak it by any means to anyone for any reason. Because this is very, very sensitive information. It could be a trade secret of the client. It could be a secret recipe. It could be a trademark practice, a patented product, EPS of a company whose results have not yet been public. We cannot use this information for insider trading, another big subject, big topic. If I start talking on it, the session will be over. Professional behavior. What's that? Professional behavior. Students sometimes tend to confuse this with professional competence. Okay, let me draw a comparison between these. What is professional competence? When I say professional competence, I do mean that person providing the services should be competent enough. That means he should be expert at what he's doing. For example, if I'm selling my accounting services, I should be good at IFRS. If I'm auditor, I should be good at IAS, ISRs, International Standards on Auditing. I should know the local laws and regulations. I should know the tax rules. I should keep myself updated with the changing laws and regulations. I teach tax in Pakistan, and I know how hectic it is to keep myself updated for tax laws with the changing tax laws and regulations. Very, very challenging. Are you getting this? So this is what it is. These are the 5 principles. Okay, so I was drawing the comparison between professional competence and professional behavior. Now, what is professional behavior? As the name suggests, this is about the behavior. That point was about the competence, skills, knowledge, ability to do something, behavior, behavioral pattern, because our behavior is subject to influence from external factors. Okay, if the auditor is auditing a company, for example, uh, the threats to objectivity, on which the core emphasizes a lot. The auditor may incline towards the client on account of self-interest. We'll see that on account of personal close relationships. So we should be very much up to date with the latest laws and regulations which govern our professional behavior as well. Not only competence, not only skills, but our behavior, because those requirements which are applicable on our behavior, on our conduct, we should also be following and adhering those standards. Okay, so professional behavior means that an auditor should make sure that they're aware of the latest legislations relevant to the profession and they apply it properly, appropriately, relating to the behavior. Are you getting this? So you can have a look at these. We've already discussed these. Integrity, let me read it as well. Straightforward, honesty in professional business relationships, fair dealing, truthfulness, strength of character. Even if you're facing any ethical dilemma, pressure from your senior to do something wrong, stay strong. Objectivity, keep yourself free from biasnesses. Don't get pressurized from someone. Don't get tethered from someone. If no matter your close family relationship is there on the client, no matter whatever happens, stay strong, stay objective, stay independent. Be independent and be seen to be independent, because outside world will be looking at you. Suppose if you are acting on behalf of client, negotiating finances on their behalf, contesting their case, the outside world will see you as their agent, as part and parcel of the management, as part of the company, not independent. Even though you are very independent, even though you are very honest, but the outside world will assume you to be the part of management, to be taking their sides. Okay, so conflict of interest, undue influence, undue reliance on individuals, organization. We shouldn't be feeling reliant on any particular client. We will be looking at all these threats. Okay, professional competence, as I already told you, skills, experience, knowledge, and all those things. Confidentiality, I talked a lot. Insider trading, share prices, their recipe, everything. But there could be a possibility that they might be doing something fishy, problematic, illegal, harmful to the public. What are we going to do then? We're having a separate discussion on that. Professional behavior, as I told you. So the broad concept of these 5 principles, is it crystal clear or not? So that we can move on. And I need your acknowledgements quickly, because I want you to stay awake, stay alive, and give me your acknowledgements quickly. Perfect. Okay. Now, a very, very important discussion coming your way. We discussed the 5 ethical fundamental principles, 5 fundamental principles. There could be violation in respect of these principles. In the exam question, you may be asked about violation. You may be given a situation and you may identify violation from any of these 5 principles. But this one, objectivity, this is not that simple. This fundamental principle is very important and a very detailed one. There is a lot of discussion involved when we talk about objectivity, because there are various situations. There could be various situations. There could be various incidences which may affect, or which may, what should I say, which may be guiding your behavior, which may be impacting your behavior. And you may feel biased. You may fall biased. Okay. So we'll see which situations are those and what are we supposed to do in those situations. How we will be biased, how we will feel biased, how we can feel biased, and what can we do to overcome that bias. Okay, should we move on? Threats to objectivity, we will be discussing each threat one by one, and this discussion is the most important discussion. Why? See, because when I'll be discussing these threats, when I will be discussing every situation causing this threat, creating this threat, then your focus, attention, and concentration will be the key to success. Because I'll be explaining you why is it a threat. Okay. What do I mean by that? What I'm trying to say. Okay, let me demonstrate to you. Okay, Mazar, don't worry. We have just started threats to objectivity, and you will catch up. Don't worry about that. Okay, whatever you have missed, please cover this through the recorded session. Okay, let me make use of my pen if it's charged now. Okay. As I just told you, that the discussion coming your way is very important because you have to be very attentive from two perspectives. Whenever the question is tested in examination, you will be given a scenario. We'll be practicing a lot, inshallah. When you will be given a scenario in the examination, you will read the content, you will read the technical content which is given to you in the question. And after reading that, you have to identify which is the situation giving rise to a threat. And in respect of that threat, you have to obviously explain in your examination. So you will be having two major responsibilities in respect of every threat identified. And what are those responsibilities? Number one, you should be able to identify what is the threat. Is it a self-interest threat? Is it a self-review threat? Is it a familiarity threat, advocacy threat, intimidation threat? What is the threat? And then you have to explain why is it a threat at all? What is a threat and why is it a threat? That's particularly important. And what students do, students miss this element, miss this very important element. When they're explaining why is it a threat, this is the key requirement which will fetch them the necessary marks. And this technique doesn't only hold good in ethical principles and ethical considerations, this technique will hold good in every other part of the question or every other part of AAA as well. Why? Question yourself and you have to answer it. It will be very easy to spot on this situation is creating a self-interest threat. But why? The next step is to explain it that why is it a threat? Why is it a threat? Why is it a threat? I'll show you how. But at the moment, keep these two things in your mind that you have to explain what is the threat, identification of threat. Okay, so this is nothing but identification of threat. I apologize. I'm not able to write on my screen properly because I'm using the screen camera. After the break, I'll be switching the camera so that I can write it easily. Identification of the threat. Are you getting this? Identification of the threat. Which threat it is, and then what's the threat. Okay, I'll dwell into it in much detail as we move on. So, broadly speaking, 6 types of threat. We'll be discussing each threat one by one. Every threat is important to the core. Examiner is very much interested that you identify the threat properly and give necessary safeguard as well. Number 1, self-interest, self-review, familiarity, advocacy, intimidation management. So we'll discuss it one by one, and we'll have the idea what each threat is all about. Self-interest threat. What is this threat? And why do we say, or when do we say a self-interest threat arises? Okay, so a bit about this threat, and then we'll be discussing various situations creating this threat. And that would be a particularly important discussion because the situations we will be discussing, we'll be examining in AAA exams. Will be part of the exams probably. Okay, so self-interest threat, very important discussion, where the auditor has a financial or other interest that will inappropriately influence their judgment or behavior. Either the auditor has the financial interests, the monetary benefit is involved, or any other interest. It could be a non-monetary interest, but still an interest exists. And on account of that interest, there is a possibility, there is a risk that auditor will not act objectively. What do we mean when we say auditor will not act objectively? Auditor will not take the necessary step needed. Auditor will get biased. Auditor will get tilted. For example, auditor finds a mistake. Auditor will ignore it, might ignore it. That if I tell this misstatement to the client, my interest will be lost. My stake will be damaged. So is this an appropriate behavior? Answer is no, because you are not doing this duty to save your stake, your interest. You are doing this duty. You are given the responsibility by the shareholders. You are their agent. You are acting in capacity of their agent. So you should be telling whatever fair affairs are. You should be giving true and fair view without being biased a penny. Are you getting this? So number 1 situation. So the situations which may result in self-interest threat. Fee dependency. So in exam situation, you might be given a situation, you might be given a scenario in which you are told that acceptance of this assignment will result in a very high fee. The client is offering you a very high fee for this assignment, for this additional assignment. And suppose if the client is offering a very high fee for any additional assignment, so can there be a possibility that your firm will then be quite dependent on that client because you will be earning a major chunk out of that client? Audit fee, for example, taxation services. They're willing to give you taxation services as well. You're already doing audit. They're giving you taxation services as well. Major chunk being derived from a single client. So we will be dependent on that client. There might be a possibility that we will be very much scared of losing that client. So we might be acting unobjectively. We might be ignoring their errors. We might be accepting whatever they are saying. We might be agreeing to their wrong treatments. So all these things are detrimental to the interest of shareholders. You shouldn't be doing this. Are you getting this? So whatever we are discussing, whatever I'm telling you, whatever you are listening, whatever you are focusing, that's the food for thought. Because in exam, you can only write when you have food for thought in the mind. So all this discussion is for your food for thought. Okay. So if you encounter any such situation in examination, so you will be highlighting this fact that if the firm is highly dependent on a client in terms of that fee, then it would be very difficult for the auditor act objectively, and auditor may be inclined ignore the errors of the client to keep the client intact, avoid losing the client, or to avoid facing their displeasure in respect of any situation. Are you getting this? What are safeguards? We will see it later. Is this crystal clear to everyone, dear students? Are we on track? Everyone, fee dependence. And where the major problem arises, suppose we are auditing a client, we are the auditors of a client, we are auditing a client. And what happens? They want us to perform any additional service for them. For example, we are auditing a client, we are auditor, existing auditors, and they ask us to provide taxation services, or they ask us to provide any valuation services. This is the typical situation when this happens, that the total fee derived from the single client is a huge chunk. And the firm starts getting dependent on that single client. For example, that the single client might be earning the 30% revenue, 40% revenue for the firm. We might lose our objectivity in that case in order to continue that client, because obviously financial and commercial considerations are always on top in some situations. Okay. So an accountant may fall prey to those considerations. Gifts and hospitality. And when we'll be practicing exam questions, there will be multiple other situations coming up, multiple other cases coming up. Okay. Cases, how this is tested, cases. Situation will be the same, but there will be many cases. Okay. So we'll be practicing, inshallah, a lot. Gifts and hospitality. What does that mean? For example, the client is offering nice gifts to the shareholders. We should not forget the position of the auditor. Three-party relationship. Shareholders have appointed the auditor. An auditor is acting on behalf of the shareholders. And suppose, so if I say in very close terms, the role of auditor is just like police, cop, who is investigating the affairs of the company, who is reviewing the affairs of the company. Although I shouldn't use the word investigating, but just to give you an idea of what the role of auditor is. The role of auditor is more of a sort of an invigilator. And how do you feel if your invigilator gets very friendly with you? You're performing an examination and your invigilator gets friendly with you, and you might be deriving benefits out of it. Okay? You understand what I mean? So how will it be if the auditor starts supporting the management? It starts in getting inclined towards the management. Then shareholders will think there is no utility of an independent person because he is no more an independent person. Are you getting this? Gifts and hospitality. Suppose if the client is, when I say client, I mean management of the company. The management of the company gives lots of nice gifts to the auditor. We are on this point. I hope you all are with me. Although this is a bit theoretical discussion and it sometimes get difficult for the students to carry with the teacher, but this discussion is, I believe this is really important as well as interesting discussion. Few students say it's a boring discussion. No, it's not boring. It's very practical, very, very practical. And all these practical aspects are examined in your paper. Getting gifts and hospitality. Suppose the client or the management offers lots of precious gifts to the auditor. When I say auditor, I mean the entire audit team. Entire audit team is covered in this word. Auditor or an engagement partner is also auditor. Manager is also auditor. Supervisor is also auditor. Some members may be senior. For example, partner, the senior most. Manager or director, manager. They could be different hierarchies. In Pakistan, when I was working with KPMG Pakistan, there was a long hierarchy. The smallest was the intern, then executive, then senior executive, then supervisor, in charge, supervisor, assistant manager one, assistant manager, deputy manager, manager, senior manager, director, and then partner. This was the hierarchy. So suppose if in a team, there's a partner, there's a senior manager, there's a manager, there's a supervisor, there's a senior, junior executive, or a part of audit team. All is audit team. You will say auditor. Yes. The impact of various gifts will be different for different levels of people. Because if threat is concerned to the partner, that threat will be more deadly. If threat is concerned to the junior, that threat will also be a mini one. Okay. So we will discuss this, how the magnitude of threat is evaluated. Number one, we are evaluating a threat, whether there is a threat or not. If there is a threat, why is it a threat? We are asking two questions. And then at a later stage, we will be asking ourselves the magnitude of the threat. Okay. And that magnitude is not only monetary magnitude. Okay. Okay. Gifts and hospitality. So the client may offer you a nice gift, for example. Auditor or the audit partner is offered a world tour by the CFO of the company. The CFO has, or the company has gifted a world tour package to the audit partner because the client is engaged in a travel industry, is a travel industry client. So they have provided a free world tour package to the auditor, to the audit partner, the senior most level position. Will it create a self-interest threat? Yes, it will. Because auditor, if receiving such a significant gift, will be willing to continue these gifts in the future as well. Will always try to keep himself nicer to the client so that these gifts may flow in future as well. Okay, so gifts and hospitality, there could be very precious gifts, expensive gifts. And if you see any such indication in the question, obviously we'll be practicing that there is a very precious gift, very significant gift, a paid holiday trip, a car as a gift in the birthday, or something like that, that will seriously result in self-interest threat. Okay. Gift of a very expensive cell phone. Can there be act of hospitality which might not create threat, Yes. For example, the audit team members are offered a discount of 20% on all the company's products. Similar to what discount the employees are offered. Is this an act of hospitality? Yes. Is the team getting benefit out of it? Yes. Is it likely that it results in a significant threat? No, because this is a customary discount the management is giving to its employees, and management is also extending this discount to you. Management is giving free lunch to the employees and also free lunch to the auditors. Act of hospitality. But this is a customary act, or the same as they are offering to other employees. Not a very although again it's a special treatment, but not very, very special out of the blue, out of the world. Are you getting this? So this act of gift and hospitality, and obviously significant gift and hospitality, results in self-interest threat. It can also result in intimidation threat. It can also result in familiarity threat. And we will look at it later. I'm not explaining you at the moment because at the moment we haven't yet discussed all three threats. Otherwise, I would have explained it to you. And this is the beauty of a threat. Listen to me carefully. This is the beauty of a threat, that one single threat might be having three dimensions. You might be able to explain one single threat from three perspectives, three facets, from three angles, from three different angles. You can explain the act of gift and hospitality from the angle of self-interest threat. You can explain it from the angle of intimidation threat. You can explain it through the angle of familiarity threat. There are three angles and three valid justifications, three valid explanations. And I'll tell you how. I'll show you how. And if you are able to explain it properly in different dimensions or directions, mind my word that every dimension is bound to fetch you an additional mark. Sometimes students complain that we are not able to find out sufficient threats. No matter. If you found out this one, and this is resulting in three threats, explained from three angles, and you'll get three different marks, three separate marks. Angles. So these are angles. Same threat, same situation, different threats. I'll show you how. For now, simply focus on self-interest threat, and I'll show you how. You can explain others as well. Unless in the normal course of business, trivial or inconsequential. Gift and hospitality, act of gift and hospitality. Very significant gift, act of hospitality, not allowed. Avoid it. Unless it's in the normal course of business, trivial nature, inconsequential, not very material, not very significant. In the normal course of business, as I told you, providing lunch to employees, providing discounts to employees. That's nothing out of the blue. Are you getting this? Owning shares, financial interests. Owning shares in a client, in an audit client, not allowed. Not allowed. Owning financial interest, not allowed. Are you getting this? Why not allowed? Explanation. Please explain. Why is it not allowed? Because if auditor is owning shares in the client, if auditor is holding a financial interest in the client, then don't you think that auditor will always be inclined or hoping or making efforts that the profits of the entity gets higher? Because auditor might be having the shares. And if the profits go high, share prices go high. And even the auditor is auditing, and even the auditor found out a misstatement, which is resulting in reduction of profits. Auditor will tend to ignore this. Auditor will try to ignore that problem or misstatement. Why? Because if this misstatement or adjustment is identified, profits go down, share price go down, my investment in this client will also go down. Are you getting this? So auditor may think to maximize the return or investment. Okay, Vivek. Well, there are not monetary limits. Okay, there are no monetary limits, but this ethical code is a principle based code, principle based approach. Are you getting this? Direct financial interest. If it's an audit team, number one, dispose it. Even if you are holding it, if your close family is holding it, dispose it. Okay. If it's a junior team member, we can rotate, we can remove that team member from the audit team as well if it's not disposing, but no monetary limits. Okay, we will see the safeguard a bit as well additionally, but no monetary limit as such. There could be some monetary limits in various jurisdictions, but as far as the code is concerned, there is no monetary limit. Okay, so uh, okay, so here at this stage, I would like to take a break because it's prayers time here in Pakistan, and I will be back after the prayers break. So this will be around 15 minutes break. Okay, 15 minutes break, and we'll be back after the break. Uh, so those who wish to offer their prayers, please do so, or those who wish to have a cup of coffee or a tea, please do so. We'll be back after the break. The class will end. Okay, let me tell you as well when the class will end. Hello, everyone. Welcome back. Can you please confirm me? Am I clearly audible and visible to all of you? Need your acknowledgement, please. Am I crystal clear now? Please confirm me. Am I crystal clear now? Jihan, please confirm me. Is my voice clear now, or is it still low? Perfect. Thank you. I apologize. I couldn't offer you snacks. We cannot share the snacks online. Okay. But hopefully, surely, inshallah, you will celebrate your success online when you will pass AAA. Okay. So we're talking about gifts and hospitality. The very important thing, uh, and a very interesting thing which I was discussing is that a single threat may be discussed from multiple angles, and I will show you how. Once we go to that point when we discuss intimidation and familiarity threat, I'll show you how a single thread could be discussed from multiple angles, multiple perspectives. Okay. Owning shares, we already discussed. Owning shares, suppose if the auditor is owning shares in an audit client, if the auditor is owning shares in an audit client, auditor will want to maximize his return. Okay. The auditor will not want its investment to devalue, to go down. And suppose if there is any adjustment, any misstatement, then auditor will be inclined to hide it, not report it in its own favor. Then comes loans and guarantees. Okay, my focus when I'm discussing these threats, these incidences, these situations, my focus is on the reason that why is it a threat. You know it's a self-interest threat because it's written under the heading of self-interest threat. Obviously, that's not a big issue. Why is it a self-interest threat? This is an issue. And I'm particularly discussing the reason why this is an issue. Okay. Okay. Amina, let me repeat. The reason, suppose if I am the auditor of a client, ABC Limited, an auditor holds 10% shares of the client. Okay, what will happen? An auditor is auditing the financial statements of the client. An auditor identifies a mistake, an error, or a misstatement. If that misstatement is rectified, the profits will go down by $5 million. If the profits will go down by $5 million, the share price will also go down. If I'm the auditor, if I am owning 10% investment, 10% stake, will I be willing to propose this adjustment? I'm asking you. Will I be willing to propose this adjustment, Amina? What are your thoughts on this? This is the reason why this creates self-interest threat. Because if I have the investment, my self-interest will come in front of me or in front of my responsibilities as an auditor. Now you get this? Did you get this? Please confirm me. Or is there any other doubt? Great. This is the benefit of the live session. That whenever you are stuck somewhere where you don't understand anything, please do ask. Loans and guarantees. Loans and guarantees. Okay. What do we mean here? Loans and guarantees. Here, we are simply meaning that what if the client has given loan to the auditor? Client has given loan of $2 million to the auditor. What will happen? Simple. The case, as we discussed above in 3, if auditor has obtained a loan from the client and auditor identifies, suppose, any misstatement in the financial statement. So, will the auditor be willing to make the client unhappy by proposing an adjustment which might bring the profits down? Will the auditor be willing to displease the client as auditor has already taken a $2 million loan? No, because auditor's own self-interest is coming in the way of his duty as an auditor. Are you getting this? So this creates a self-interest threat. The interest is now coming in the way of his duty. See, explanation is the key to success. Listen to the reasons very carefully. Unless, okay, now these are mini safeguards which I have mentioned where necessary, where there are specific safeguards and concisely I've mentioned few places. Unless on commercial terms or in the normal course of business. Unless on commercial terms. What do you mean by that? Suppose if this client is a bank, if our client is a bank, can we take the loan from a bank? Yes. And if we have taken a client from if we have taken a loan from our client who is a bank on the normal commercial terms, will it be a threat? Will it be something we'll be debted of, or will it be something we will be influenced of? Everyone? Any idea? Yes. At that particular case, in that particular case, the threat is not there. Okay. The threat is not there. Okay. Unless on commercial terms or unless in the normal course of business, or it's highly immaterial. It doesn't matter. The amount is very minimal. Okay. That it doesn't affect the objectivity of the auditor. Then we say, okay, it's fine. But as we move down the line, we will read and we will study that if there is any threat, auditor will try to reduce, either auditor will try to reduce that threat to acceptable level. And if it is not reducing to acceptable level, then auditor has no other option but to eliminate the threat completely. In that case, auditor might need to do away with the issue which is resulting in threat. Okay, business relationship, marketing arrangements, purchasing of goods and services. Okay, can there be a possibility that auditor is purchasing goods with the client? Yes. Is it a business relationship? Yes. For example, a client is an AC manufacturer. Can the audit firm purchase 20 new ACs for his brand new office? Yes. Yes. Is this business relationship sort of thing? Is it purchasing of goods sort of business terms, business relationships? Yes. Is it harmful? Question mark. Yes. Unless at commercial terms. If we are dealing in business, if we are, I'll talk about the venture just later. This is a bit later. I'm talking about purchasing of goods and services. Again, purchasing of goods and services, same principle applies. If this purchase transaction is done on the commercial terms in the normal course of business, perfectly fine. No issue, no threat, no problem. But if it's on preferential terms, then there is an issue. Then this will create a threat. Okay. Either we then have to reduce the threat or eliminate the threat. That's another perspective of it, which we'll be discussing it later. What about business relationships? Other business relationships, joint venture, marketing arrangements. What do we mean by that? Can we have a venture with our client? Yes. Can we have a business venture with our client? Yes. Can we have a joint investment running somewhere? Yes. Can our client be a business partner? Probably. What does code says about this? The code of ethics say that such sort of business relationships, such sort of joint venture, when you and your client are partners in any venture, and you are auditing your client, who is in another capacity your business partner in any other venture, this will create a self-interest threat. Why and how? See, listen, how? This is because when you will identify any problem in their financial statements in capacity of an auditor, obviously it will displease them. Suppose you have uncovered, you have identified a misstatement of $5 million, and now you want to rectify the profit and loss. It is resulting in decrease in profit. So obviously it will result in displeasing your business partner, and it may have detrimental effect on your partnership, on your business relationship, as a result of which the auditor might be reluctant to rectify that error, to communicate that error, to perform his duty as an auditor. Self-interest threat. Are you getting this, everyone? Is this crystal clear or not? Please confirm me so that I can move on, because I'll increase my speed because there are various situations. So I need to discuss the reasons. Please. Perfectly fine. Potential employment. Listen to this very carefully. Dear students, need your attention. Potential employment. What do you mean by here by potential employment? When an auditor is auditing a client for so long, and the bonding gets strengthened. Suppose a senior team member is working on the audit engagement, coordinating with the client. Then it happens many times. I've seen it many times that the client ultimately approaches that particular member and hire on his own payroll as an employee for the services, by offering obviously a higher salary, more benefits. So see what is happening. Audit engagement is going on. A senior is working on the audit engagement. And the potential negotiations with the employment are underway with the client. The client is approaching that senior team member in relation to the employment. So the stake of that auditor, stake of that audit team member will be involved. And he will not be willing to displease the audit client because he might be his potential employer. So suppose if their audit team member finds out any mistake in the financial statements, any problem in the financial statements, what do you think? Will he be willing to communicate and displease his potential employer? Anyone? Will he be willing to do that? What are you? What are your views? Very good. He will not be willing to do so. Again, his self-interest, his own personal interest comes in the way of his duty as an auditor on account of interest, not necessarily financial interest, any other interest. As the definition suggests, financial or other interest. Okay, moving on to the next point, overdue fee. Overdue fee. What does that mean? Suppose if I've performed an engagement, I've provided services to my client. My fee is overdue. They have not paid me the fee. And the next year is just going to start. It creates a self-interest threat. Okay. Since it's written here in the list of a self-interest threat, so you got to know that it creates self-interest threat. But this is not the solution. I need the reason why it creates self-interest threat. Because suppose if I'll be starting the next year's engagement as an auditor, with my previous fee due, still due, then don't you think, for the sake of recovering my fee, I won't be willing to displease the client. Suppose I started the next year's audit without taking the previous fee, and I identified any problem, any error, any misstatement, which is bringing the profits down. I have displeased the client by identifying their errors. So I will be scared of losing my all outstanding amount if the client gets unhappy. You can say, okay, so you're getting over efficient, we'll not pay you the whole fee. So don't you think we'll try to be nicer to them to recover our whole fee? So the code says obtain full or partial payment. If you have not at least get partial payment. If not, seek reappointment. Check whether you remain independent or not and seek reappointment. Or even if you are doing or even if you have decided to do the next year's work, get it reviewed by engagement quality reviewer, because your work might have been subjected to this threat. Are you getting this? Okay. Contingent fee. Contingent fee. Okay. Seeking reappointment means that since there are independence issues, because when we are seeking appointment, we look at all the independence issues. So here it means that since you are now not independent, and the court says that your objectivity is now impaired, seek for reappointment so that you look at all the ethical factors again. And you go through that checklist again, that whether I am ethically competent to undertake this assignment or not anymore. Are you getting this? Is this crystal clear? Please confirm. Right. Contingent fee, as the name suggests, the fee is contingent upon some event. What could be that event? Example. Suppose the fee is contingent upon, audit fee is contingent upon the profits of the company. Audit fee is contingent upon the revenues of the company. Okay, if audit fee is contingent upon the profits of the company, and I know that if the company's profits go high, my fee will go high. It is dependent upon the profit. For example, 5% of the profit or 3% of the profit. If the profit will go high, my fee will go high. And suppose if I've identified any misstatement which is lowering down the profits, will I be willing to propose that adjustments? Let me know. Will I be willing to propose that adjustment? That's why this is a self-interest check. Very good, on target, on the point. And I appreciate your activeness, your active response, active involvement, because this is how you absorb things quickly and you don't forget. See, this AAA paper is all about your professional skills, your professionalism. This is not a knowledge-based paper that you wrote, learn it, and pass this paper. No. This is a practical paper. If you have understood properly, if you have concepts properly, you are good to go and attempt your question. No rote learning is required, okay? Contingent fee, not allowed for audits. Contingent fee is not allowed for audits, okay? For non-assurance engagement, prohibited if fee material or outcome is dependent on future judgment relating to the material amount of financial statement. Even it's a non-assurance engagement. When we say non-assurance engagement, although you haven't yet studied non-assurance engagement, but suppose the non-assurance engagement is, for example, tax refund services. Can we provide tax refund services? We will see later. It's a non-audit, non-assurance service. And the client says to the auditor that please process our refund and your fee will be dependent on 1% of profit or 2% of profit. Although it's a non-assurance engagement, but the fee is dependent upon the amount, material amount to financial statement. Is it allowed? No, it's not allowed. Are you getting this? So for audits, contingent fee not allowed. For non-audit assignments, allowed with restriction. But even if for non-audit assignments, the contingent fee is very material or it is dependent upon any material amount of financial statements, not allowed. Getting? Compensation evaluation on cross-selling. Now, what does that mean? Very simple. Suppose I am the audit partner. I am the audit manager. Not take the example of partner. I am audit manager. And my performance, my bonuses, my pay level is dependent, or my compensation, my bonuses, my compensation is dependent on the fact that how much additional services I have sold to the existing audit client. Okay, sir, then to sell the additional services to existing audit client, I need to be very nice to them. I need to be very polite and kind to them so that I can offer additional services. Because when my relation with the client will be friendly, will be close, will be bonded, then only I'll be able to better pitch my other services. So, in order to be friendly, bonded with the client, don't you think I might be inclined to ignore errors and misstatements? Everyone, are you getting this? Don't you think that we might be inclined to ignore the errors and misstatements? Yes. This is the reason why it's not allowed for the audit partners. Okay. Okay. We saw ample of situations creating self-interest threat. Now comes familiarity threat. Now, what does that mean? When the auditor becomes too sympathetic, too sympathetic, too soft-hearted, or too trusting for client and loses professional skepticism. Now, these words are very important. If you keep hold of these words in your mind and your memory, your drafting will be very much, I should say, professional. Because mind my words that in question number 1, you will be rewarded marks for clarity of expression, communication. And if you are using proper wordings, no, you are allowed to sell audit services. It does not mean that you're not allowed to sell other services. You are allowed to sell other services, but your evaluation or performance will not be based on this factor. Okay. Audit partners' performance evaluation will not be based on cross-selling of these services. Do you get this? So familiarity threat. What do you mean by familiarity threat? When auditors become too sympathetic or too trusting for client and loses professional skepticism. This is the main word or terminology here. These are, in fact, all of these becomes too sympathetic, too trusting, loses professional skepticism, compromises professional skepticism, sacrifices professional skepticism. Examiner likes these wordings. Either this is the case, that you become too sympathetic, too trusting, and you lose your professional skepticism, you lose your auditing skills, you lose your critical thinking, you lose your questioning state of mind, inquisitive mind, or where the relationship between the auditor and client goes beyond professional boundaries. What do you mean by that? That the relationship between the auditor and client goes beyond professional boundaries. For example, on a client I'm auditing, my spouse is acting as a CFO. Now, the relationship has gone beyond the professional boundaries because my spouse is a CFO of the client, which I'm auditing. So now not only professional considerations will be in my mind, but personal considerations, the relational considerations will also be in my mind. Are you getting this? Situations, examples. Long association of senior personnel. Now, how these situations create familiarity threat. Let me explain you. Long association of senior personnel. Suppose a senior guy in an audit team, he is working on the audit client since last 3 years, 4 years. And he knows the client very well. Client knows him very well. He is friendly with the client. He thinks that he knows everything about the client, and he says that client is okay, not problematic. They don't misrepresent. They are always okay. They're always right. Whatever they give is trustworthy. So what he's getting too trusting, too sympathetic. He has compromised the professional skepticism. You cannot close your eyes from the client towards the client, because it's your duty to act vigilantly. It's your duty to act with professional skepticism. It's your duty to think, apply professional judgment, think from inquisitive mind. And if you are not doing this, you are not forming your responsibility. This familiarity or this familiar relationship which has been developed this last 3 years, this has faded your professional skepticism. Now you are not questioning the obvious matters which requires the questioning attitude, which requires the challenging attitude. The unusual treatments of the clients are also tolerable for you for no reason, because you think the client is right. Because you are now too trusting on the client. Getting long association of senior personnel. What's the solution? Rotate him, send him to another team, remove him from the client. Simple. Family or personal relationship, as I gave you the example. For example, my spouse is working on as a CFO of another company I'm auditing. Now, I might be too trusting that my spouse is very competent, my wife is very competent, and whatever she has reviewed, whatever financial statements she has presented, might be the masterpiece, might be perfectly fine. Are you getting this? Might have no issues, because I know she's very competent. Even if I don't know she's competent, there is another threat, which I'm just explaining you. It's called intimidation threat. I might be intimidated, I might be threatened, or I might feel threatened to identify or spot on the errors of my wife's work. Because at the end of the day, I have to go home and I might be thinking, if I'll be too professionally skeptic, then my life may turn into hell. Isn't it? So, family and personal relationship, the trusting element, plus it also creates intimidation threat, which we'll be discussing in intimidation. As I told you, that one single situation may give rise to multiple threats as well. Okay. Third one. This one done, this one done. Third one. Employment with the audit client. What do you mean by this? Employment with audit client, I simply mean, again, the same situation which we discussed earlier. From self-interest perspective, now here from familiarity perspective. Here we are questioning why on earth client is approaching our team member for the potential employment. Why? Because the relationship between these two are very friendly, are very familiar. So don't you think there is another concern? There is another concern. Even if the self-interest threat doesn't hinder the professionalism of the auditor, even the self-interest, the wall of self-interest doesn't hinder the professionalism of the auditor, don't you think there is another reason to doubt his objectivity? That why at all the negotiations of employment have started? Because he has got very familiar with the client. So familiar that client has started to think to hire him. So the relationship very familiar, very close. Okay. employment with the audit client creates familiarity threat. We already discussed familiar self-interest threat, familiarity threat. Another threat is intimidation threat. We will just be discussing it shortly. Okay. Okay. Just since I'm speaking continuously, so I'm just taking 2 minutes break and then I'll continue to discuss things with you. Okay. Okay. A very important threat. Welcome back. A very important threat coming your way, which is self-review threat. This is the most favorite threat of the examiner. In a question on ethical considerations, you are most likely to see this threat. Even two threats, two self-review threats. Even okay, very interesting threat, and you have to clearly understand that this threat is divided, or the cause of this threat could be discussed from two perspectives. Very important. Okay, see, I'm reading this text. Okay, please be focused. Where the non-audit work is provided to an audit client. So, what's the situation? We are auditing a client. We are the auditors, and the client is the audit client. And the audit client has requested us to provide non-audit services. Now, what could be non-audit services? Which non-audit services he could ask for? The list is just coming. But few non-audit services have been requested and is then subject to audit. And that non-audit work, suppose a non-audit work, just for example, bookkeeping, data entry, compilation of financial statements. The client says to the auditor, please compile our financial statements. And when the financials have been complied, now the client is saying, please audit this financial statement. So what is happening? It's a very interesting situation because we have done certain work. And we ourselves are auditing this compiled financial statements. We have ourselves compiled this, and we ourselves are checking this compiled financial statement. What's the problem? Anyone? Any random guesses? What's the problem? Think. Any guesses? What could be the problem? Anyone? To identify the problem, think as if you are attempting a AAA exam and ACC announces as soon as you are done with your paper, ACC announces that from this attempt, we are introducing a new policy, and those who have attempted their paper will be marking their own scripts. First of all, tell me what will be your feelings? What will be your feelings? Good or bad? After this announcement, what will be your feelings? Please respond. I hope I'm audible to everyone. Burton is very honest in saying that I will give myself more marks. True. And Amna is saying it's a very nice feeling. Okay. There will be two problems. And these two problems are the problems with the self-review threat. If you are able to understand these two problems, so whenever this threat will come, you will explain both of these problems within a jiffy. Okay. What are those two problems? Problem number one. Problem number one. See, problem number one. You might intentionally try to ignore your mistake, or even if you are very honest, which means there are two problems. Number one, you might intentionally try to ignore your errors to give yourself more marks with the malified intention, here in problem number one, and this is problem number two. With a malified intention. And what's the problem number two? Problem number two is, even if you are damn honest, even if you are very objective and honest, and even if you have clear intention to justifiably mark your own copy, which you yourself have attempted, don't you think whatever you have done is the best thing in front of you? Whatever you have done is the best treatment in your eyes. It's the best work in your eyes. In your eyes, you have done the masterpiece. Most of the students who come out of the examination halls, they say, what a paper. We attempted AAA paper with so ease. And this time we are surely going to pass. Why? Because whatever mess they've done, in their eyes, it's the best. So if that's the best, if you are checking it, how can you identify your own errors? So these two problems are always there with self-review threat. Okay, so here it has been explained. Read it. Where non-audit work is provided to an audit client when non-audit work is provided to an audit client, where non-audit service is provided to an audit client, is then subject to audit. The auditor will be unlikely to admit to errors in their own work with a malified intention, intentionally. This is not a mistake. Or even if the auditor is very honest, or Here, I have separated with the highlighter. May not identify the errors in the audit because I've done my work. It's okay in my eyes. And these two problems exist everywhere in all these threads. I'm reading it one by one quickly. I've explained it to you. Now I'm reading it quickly. Accounting and bookkeeping, financial statements preparation. Auditor has provided bookkeeping services, financial statements compilation, and auditor is himself reviewing that those financial statements. Both of these problems exist. Internal audit service, auditor has provided internal audit services in relation to control testing, control weaknesses, process improvements, and as a result of audit, all these come under the review of the external auditor. For example, internal control, control testing, control weaknesses, reviewing own work, reviewing own controls. Both of these problems exist. One thing very important, and in most of the situations, you will see and notice this, that the code specifically says that not to assume management responsibility, not to assume management responsibility. Now, what does that mean? There are few services specifically internal audit services, IT services, even in valuation services, more in internal audit and IT services. Code of ethics is very specific in saying that these are the type of services where the auditor may assume management responsibility, where the tasks of the auditor might interfere with the management's responsibilities, management's roles and functions. For example, internal audit service. If the internal audit services have been provided with the objective view and incapacity of internal audit, keeping in view the roles and responsibilities of the internal audit, then it's fine. Not allowed for listed company. We will see it later. Cannot provide internal audit service to a listed company. But if it's not a listed client, yes, we can provide. In addition to the audit, yes, we can provide internal audit services. But what happens? What is the problem with internal audit services or IT services? When the firm provides these services, willingly or not, they are stuck in a situation where they are taking decisions. For example, if they are performing internal audit function and they find control weaknesses, they will be rectifying the controls. They will be passing instructions to implement the controls. It's not their responsibility. It's the management's responsibility. Implement controls to streamline the processes. And if you, being part of internal audit, you are doing this management's task, then you are performing management role. Are you getting this? And this is the reason why in most of the companies where you have seen internal audit, you might have seen it as an internal department, because there are many tasks, there are many executions which the internal audit team, being the internal function of the company, can execute in capacity of management. Whereas it is not allowed to auditors to assume that responsibility. But it apparently seems that internal audit services and management sort of function, they're very closely linked. And ethical standards are apprehending that these might overlap. So in order to avoid this, clear instructions have been given. Please don't assume management responsibility. In IT services as well, because management in most of the cases is not very IT convergent. So what they do, they give you the assignment, provide us IT services. Now, whatever is needed in order to implement those IT related functions or services, instructions are passed and instructions are implemented, processes are implemented. If the IT system relates to even financial controls, financial system, financial reporting systems, the management related tasks are being executed fluently, whereas it is not the responsibility of the audit firm. But since there is a thin boundary, therefore, willingly or not, this coexistence is usually seen in practical situations. Are you getting this? Am I very crystal clear to all of you? Everyone? Yes or no? Perfect. Okay. I think let's keep it till here today. There's much to discuss. Let's keep it till here and we'll have a look at it in the upcoming session. And the upcoming session, on account of Eid holidays, I'll notify you. The upcoming session might be on Saturday or Sunday. Okay, I'll notify you. But on account of the gazetted holidays, Eid holidays, there might be a shift in one or two classes. I'll let you know. Be in the WhatsApp group, be in touch, be connected. What is the auditor allowed to do? Okay. See, auditor is allowed to perform these services. We are not prohibiting the auditor. But later on, we will see that what are the safeguards. There are safeguards. Problems are there. Problems are there. For example, we are saying that if you ride a bike, there is a risk that you fall and your head might get knocked up. So, what's the next step? Take safeguards, wear the helmet. If you're driving a car and if unfortunately it meets an accident, you're gone because your head will strike with the steering and you're gone. What next? Safeguard. Fasten your seatbelt. Airbags. Okay? So don't worry. It's not the scene that auditor is not going to do anything. Amina, I hope you're getting my point. Is it? Perfectly fine. So see you soon in the next session. Let's keep it till here. We'll discuss further things in the upcoming session. Take care a lot. May Almighty bless you all. There will be Eid holidays, as I told you, and we'll meet after Eid. So happy Eid Mubarak to everyone as well. Thank you. Bye bye.